This is Best Day for Tuesday, August 24th. I'm John Weber. Topping our report, we're just a week and a day from the start of September. And in Ontario, Canada, when the calendar turns to the first month of autumn, residents there start talking about hockey. This September, however, auto insurance reform is competing with the Maple Leafs for attention in Ontario, and insurers just might be finding themselves on the wrong side of an odd man rush. Joining us now to talk more about this is David Gambrill from Canadian Underwriter. Dave, in the Canadian P&C insurance industry, auto insurance reforms are the talk of the town. What is the current status of the proposed auto reforms in Ontario?
Well, John, Elvis is now in the building. The reforms are due to be implemented on September 1st, 2010.
Can you talk to us about the key features of the reforms?
Well, the reforms are lengthy and complicated. In a nutshell, they're designed to lower insurers' claims costs. This is very important because Ontario auto insurers are losing money on the product. The reforms have three main features. First, there is a new $3,500 cap on accident benefits payments for minor injuries. And second, there is a new standard mandatory auto benefits package. Now, the reforms limit the medical and rehabilitation benefits to be paid to $50,000 for non-catastrophic injuries. Now, this is down from the original limit of $100,000, but consumers can now buy back up to $100,000 if they choose, or even higher limits of up to $1.1 million. Third, benefits that were once part of the mandatory package are now considered to be optional, and these include attendant care, caregiving, housekeeping, and home maintenance benefits.
Dave, do you think these reforms will work to reduce insurers' claims costs?
Well, now that's the multi-million-dollar question, isn't it? Some insurers are optimistic and some are pessimistic.
Why are some pessimistic?
Well, two reasons, really. The first reason has to do with the fact that we don't really yet know what the reform definition of a catastrophic injury will be. Now, if I have a catastrophic injury, then I'm entitled to receive benefits that are higher than the $50,000 limit. Insurers are concerned that if you define catastrophic injuries too loosely, then trial lawyers may have an opportunity to get their clients' injuries deemed to be catastrophic. Thus, they would receive benefits higher than the $50,000. And this would go against one of the central purposes of the reforms, which is to lower insurers' claims costs.
Now, you said there was a reason for the uncertainty around the reforms?
Yes, that would have to do with the minor injury guideline, which is otherwise known as the MIG. Now, we've been told the government's saying at least 55% to 65% of all minor injuries have to fall within the MIG in order for insurers to make a profit. Now, this seems highly unlikely. Insurers will tell you that far less of 10% of their minor injury claims fell within the pre-approved framework for whiplash-associated disorders, which the MIG just replaced.
Will insurers be inclined to keep raising their auto insurance premiums until the full effects of the reforms are known?
Well, not if the province's second quarter rate approvals are any indication.
Okay, what happened there?
Well, the Ontario government widely publicized that its reform-related rate approvals averaged a 1% decrease across the entire market in the second quarter. Well, this is a demonstration of that old proverb about the statistician who died while trying to cross a river that was an average of 1 foot deep. If you look at Ontario's top 10 auto insurers, 8 of them received approval for a flat rate. In total, 24 insurers received approval for a flat rate. No insurer received approval for a rate increase. So this tells me two things. One, the Ontario government is not at all interested in having a rate increase just prior to the reforms. And two, insurers are not at all interested in lowering their rates until they see the benefits of the reforms.
Dave, what happens now?
Well, looks like a game of wait and see for 2 years until the reforms roll out.
Canadian Underwriter's David Gambrill. In other news, Blue Cross Blue Shield Insurance of Delaware said it plans to merge with Highmark, a company that is based in Pittsburgh that helps the operation of Blue Cross and Blue Shield health plans in West Virginia and Pennsylvania. The affiliation will require review and approval by the Delaware Department of Insurance before it becomes effective. Three of the biggest insurers in the Lloyd's market took significant hits in first-half profits on a combination of higher catastrophe losses and adverse market conditions. First-half after-tax profit fell 49.4% for Amlin, which cited a significant increase in its tax rate along with depressed premium rates and a rise in catastrophe losses. Catlin also cited record catastrophe losses and adverse foreign exchange movements as its after-tax profit fell to $57 million. That's down from $196 million. And Hiscox after-tax profit fell 35.6% on catastrophe losses and a lower investment result. And Japan Post Insurance Company is reporting an 18.6% rise in net income for the first quarter of the 2010 fiscal year, which ended on June 30th. Premium income rose slightly to 1.91 trillion yen compared to 1.9 trillion yen a year earlier. Investment income increased 427 billion yen. That's up 25 billion from the previous year. On the day book, the Society of Actuaries Adding Value at Health Insurers with ERM webcast takes place tomorrow. Foremost County Mutual Insurance Company marks its 61st year of incorporation today, and Farmington Casualty Company, a member of the Travelers Group, is incorporated 28 years today. And now for the job of the day from the Best Day News Insurance Job Connection. An AM Best Rated insurance company is looking for a reinsurance claims analyst for its Illinois office. For more information about this job and more than 2,000 other jobs for insurance professionals, visit jobs.bestdaynews.com. Finally, the latest edition of Best Day Audio features Clive Wellsteed, a partner at Actuaries Lane, Clark & Peacock in London, who discusses the pressures on the UK bulk annuity market. Also included in the cast, the risks involved in managing a biofuel production plant as featured in Best Underwriting Guide. To hear those both, log on to ambest.com/audio. That's our report. Thanks for watching. You can follow these developments at bestdaynews.com. Join us again tomorrow for our next video edition of Best Day.
Sponsorships are now available for Best Day Video, AM Best's daily insurance newscast. To learn how you can take advantage of this opportunity, email advertising_sales@ambest.com or call 908-439-2200, extension 5399.